Good morning, good afternoon, good evening. It's your boy Gary Scott, aka the Solid Poop Assassin. Guys, we're back with another session. I'm going to be adding one more thing into the mix, right, to get you guys equipped to understanding what are the key levels and key areas you should actually be taking these trades from. Then it'll tie in with the Fibonacci tool. All right, not a lot of people use it anymore, but it's definitely a beneficial tool that you can use. It's not an indicator of any sort, so it's not going to lag. It's more just like a structural base, and it's a structural based tool to have you know where you could potentially be taking trades from. All right. So with that being said, right, we all know with the power of three and the method that I do teach you guys, um, you know, it's structured base. It's it's area value based on order blocks, fair value gaps, and structure levels, and it's pattern based because the market does these three things very often. It creates areas of values, it creates structural levels as far as trends like uptrends, downtrends, and then it also creates patterns and shapes in the market to let you know what price is going to do right at key areas of value. And that's the key, right? You want to take these trades from key areas of value like I said, your order blocks, your fair value gaps, and your structural levels. And I'll go over all of those. But I just want you guys to stick along with me. With that being said, let's get straight to it. So yeah, like I said, you have an uptrend, and in an uptrend, you only want to find areas to buy from, right? The areas are that you're buying from are these areas of value, your fair value gap, your order block, your structural levels. All right, these are the areas that you want to take your trades from. And right beneath those levels are the areas that you can actually place your SL at. All right. So from SLs will be beneath, TPs will be above the previous highs that were actually created in the market. All right. So you got a higher high, higher low. You're aiming to take out that higher high, right? Once that higher high has been created, the new one, you want to see price retest back to another area of value beneath the structure that it actually broken, either at the structure that it broken or beneath the area of structure that it broken. So that way you're being able to take these trades from either an order block or a fair value gap zone. All right. And I'll get into an example and show you like real live examples so that way it's not confusing. But again, you want to take these trades from these areas of values with the SL beneath and your take profit towards the previous high that was created. All right. And you only want to buy in an uptrend. What sense does it make to sell in an uptrend, right? You're doing the complete opposite of what's truly going on, right? And it does not matter the time frame you do trade this on. You just have to pay attention to the structure at that particular time and what structure is basically letting you know. But understand that the higher time frames controls everything. All right, the higher time frames control everything. All right, you got that. Now, in a downtrend. It's complete opposite of an uptrend, right? Instead, now it's creating lower highs and lower lows, lower highs and lower lows, lower highs and lower lows, right? Lower lows are looking to be taken out. Lower highs are pulling back to our areas of values that are created on the backside of structure that it actually broke. Okay, those are the ones that we actually want to find. Like I said before, when you get to these levels in an uptrend, you want to see a bullish candle close above these levels. That's your confirmation. All right. After that, if you're moving in a downtrend, when you're taking the trades from these levels, you want to see a bearish candle, right? Because we're selling, you want to see a bearish candle close beneath these areas of value. Okay. Once you see that area of value in that candle actually close beneath that level, you want to have your SLs above, which are take profits aiming towards the lows. All right. So I gave you guys those examples, right? There is another trend and it's called the sideways moving market, right? The market is simply just going to be moving sideways, right? No true direction of where it wants to go. It's continuously moving sideways. Like I said, no true direction, right? But what we have to understand is that after this consolidation is made, whether you call it a consolidation or accumulation, how you're able to know what's potentially going to happen after is whatever happens before. So if it bought before, more times than not, it's going to buy after. Not all the time, but a good majority of the time is going to do whatever it did before. All right. That's the key, right? That's the trick of the trade. Now let's actually go and let's take a look and actually pull out this Fibonacci tool, right? And I'm going to show you how even with this actually being drawn out like it's drawn out, this is just me just simply just taking the tool and drawing the uptrend here. But I want to show you how this Fibonacci tool actually goes into play. So whenever price creates its low here, right? That's the relative low. When price takes out a lower high on the backside of a trade, right? What price is going to end up doing is going to create the high, right? That's where you want to put your zero at, right? Your zero will be on the relative high, your one will be at the relative low. And as you see at this Fibonacci tool, with this Fibonacci tool, we see how price actually comes right back to an area of value, which is the fair value gap, right? We see how price lies right between the 618 and the 70%, right on that Fibonacci tool. I mean, right on that area of value, which is the fair value gap. All right. We want to see just a bullish candle close above, right? Normally the SLs will go just a little bit below the areas of value, but if you want to put it back below the one or at the one, then you could, right? That'll be the most ideal, deepest SL that you would possibly need, right? For then your take profit to be at the 0.27. And then ultimately what it'll do is it'll give you, right? Let's just say we entered after price closed above this level, right? And our SL was where? Let's say our SL was at the one, like I've given you the example, right? So it gave you a 50 pip SL for then a what? 115 pip gain, meaning that gave you a great 1 to 2 risk to reward ratio. You make your money, you go about your day, right? It gives you the break of structure, right? This is now the relative higher low that you need to have your one at, and then you need to have your relative zero. You need to have the zero at the relative new high that was just previously created. All right. And then what does it do? You guys see it. It rides right in between the 50% and the 618, but it also lands right smack dab on that order block. So all we need to see is a bullish candle close above, right? And then initially what we're doing, right? Let's say we're taking this entry, we're taking a buy, we see a buy candle close above this level, right above the 50%. We take our entry there, right? Ultimately, our SLs can be where, right? We normally want to go for a 50 pip to a 75 pip SL if you're on a 4 hour time frame. But if you're on a smaller time frame, it'd probably be a little bit different. It'll probably be like 35 pips or 25 pips, depending on what time frame you're on. But so let's just say, for instance, let's say we want to go for so we want to go for a 70 pip gain. All right. 70 pip SL for a 70 pip gain or just to the 0.27, right? What does that give you? That gives you a great what? That gives you almost a great one. That gives you at least a 1 to 1 risk to reward ratio, right? And it sets yourself up to have space for your trade to breathe. But again, if you don't want to have your SL that deep, of course you can bring it up to about 50 pips. That's if you're trading off the 4 hour time frame. But again, like if you're trading off the hour, if you're trading off the 15 minute, your SL is probably going to be based on the method that I'm giving y'all. It's probably going to be between 35 and below, right? 35 and below is probably going to be your SL. It possibly could even rise up to be even 40, but it's just solely based on, right, where you're taking your trades from and where you actually really want to have your SL at. All right. But if you see here, it ties in, right? I just wanted to show you guys how the Fibonacci can even tie in with the method that I'm already giving you for like double confirmation. All right. Let's take a step back and we can even look at it. We can even look at it in the downtrend, right? um the relative higher high to the relative low. We put our zero here and our one here. We see how price came right back to that order block that was right here. Guys, you got to understand, like this is something like this is just me just putting in zones here. Like I'm not even going off for anything. And we see how already, right, these levels are tied into these areas of values that I'm telling you about, right? That gives you like the double confirmation. So just kind of wanted to give you guys that. Also, give me 1 second. All right, cool. So we want to see a bearish candle actually close below this level. If you wanted to see actually a bearish candle close below the 50%, that'll kind of be ideal. But again, all we need to see is a bearish candle actually close below this order block for us to take the trade back to the 0.27. All right. And even you can take trades sometimes to the 0.618. All right. You gotta see how that works. Again, you go to the relative low. I mean, the relative lower high to the relative low. You put the zero there. Again, we see how price comes right back to this fair value gap, but it also even taps the 618 on the Fibonacci, right? You want to see a bearish candle close below. SLs will be above your area of value, and then you're taking the trade back down to the downside. All right. You gotta see how that works. Now, here's the thing. Even if we go back and we look at this, right, we already know these patterns start an uptrend. These patterns start a downtrend, but they're the exact same thing, just flipped. So you got a double bottom and you got a double top. You got a triple bottom and you got a triple top. You got an inverted head and shoulders, and then you have your head and shoulders. These patterns are the start of a trend, or they can be continuations within a trend. Okay. So now I gave you those examples, right? You see the order blocks. These are the level. You see the fair value gap, the structural level. These are where you're taking trades from. These are the only levels you want to take trades from. All right. So then now, if we go down to where we are currently, right? Let's put this into perspective, right? So what do you end up getting here, right? Price was moving in a downtrend. It ended up taking out this lower high. All right. Price broke structure of that lower high. Then when price retest, where did it come back to? It came back to this order block. Now, if I was to if I was to place my Fibonacci tool from here at this black line to this relative high, what ends up happening? The 886 lies right next to this order block, meaning the moment that you see rejection or a bullish candle come from this level, which I did, right? Which is why we actually called this trade for a buy when we did. It hit our two TPs, and for me, it's kind of on its way to the the final TP for 225 pips, right? And then look how that 0.27 even aligns with that relative high, right? Even on a higher time frame. So if we even go and look at this, we can take a look and see, right, how price ties in to going to go potentially take out this high that was created in the past. All right. So 0.27, and if price ends up breaking that level, then it's potentially even going to come to the 0.618. If everything that I'm kind of explaining to you guys is making sense, just for my doing, type of PL3 in the chat or just a number three, so that way I understand that you guys are following along and it's making sense. Because I don't want to leave anybody behind. I don't want anybody to feel like it's difficult to understand. I want to be able to explain it the best way I know how, so that way everybody can get it. All right. All right. Doug said it was good. D said it was good. Cool. All right. So again, you guys understand why I was kind of looking at it that way, and why I will be at noon actually re-entering this trade for a buy. All right. Just a second. So that was that for GA. I went over that example, just wanted to kind of like tie that in so it gives you a little bit more confirmation. Again, I don't really use indicators. I just use structure of the market and the tools that the market already kind of gives us, right? The order blocks, the fair value gaps, structure zones, right? And then the Fibonacci, right? Added that in so you guys can have a bit more confirmation when you are taking these trades by yourselves, right? Because there might be times I might not even send a signal. There might be times where I may be sending one signal a week, maybe two, it may be three, right? It all simply depends on just what I'm looking at and how I feel, right? That I feel like I want to capitalize off of to put you guys in a position to be profitable with me. All right. That was that. Now, everybody sees this trend line, right? If you don't want to enter this, right? Because I'm going to enter a bit aggressive, be honest. Like I'm gonna enter a bit aggressive. The moment that 12 o'clock comes Central Standard Time, I'm going to be entering this for a buy. All right. And then from that point on, what's going to happen is if you don't want to enter there, what you would want to see is price actually close above this trend line to potentially like retest back to the trend line and actually take off. But as long as you get like a close above this trend line on a 4 hour time frame, this trade will be still good for a buy, and you'll still have a pretty good entry, right? Because ultimately, where we're heading, we're heading towards this high that was previously created months, like a couple months ago, right? So, boom. Now let's go look at oil for a second, right? Oil did hit all three of our TPs. I'm looking to actually take this trade a little bit higher. So I'm currently kind of still in this trade. Um, it's kind of just give you guys an example of why I'm actually still in this trade and what I'm looking at. I'm kind of looking at it, yeah, I'm looking at it from a daily time frame perspective, but it still ties into the same method that I already kind of give you guys, right? The power of three, using the trends, right? Price was moving in a downtrend here. It was creating a lower high, a lower high, another lower high, right? And it was continuously creating lower lows, right? Lower low, right? So the moment that price created this double bottom here, it then pushed up, taking out this lower high, giving you the change of character for it to create a new high, for then price to retest and create a what? A triple bottom at a structural level, right? Remember, from wicks to bodies, gives us our structural levels in the market, right? From wicks to bodies, boom, boom. We drag it across and we see how price had respected that level, right? One, two, three, right? Price takes off, but in the midst of it actually taking off and creating a triple bottom, it also even created a descending triangle. And when price creates descending triangles, that's basically letting you know that price wants to buy. So then what do you have, right? Price push up, breaks this neckline of this triple bottom, retest back to the trend line, and then it actually took off to break this previous high and create a new one. So yes, consecutively, what happened? For 4 days straight, price bought. So of course it has to fall down to clear liquidity on the backside of the trade, right? But ultimately, we're still kind of looking at, and we still have to understand where we are. There's an entire order block here, right? This is the deepest last down candle before price actually broke structure, right? So if price gets to this level and it continues to respects it, it continues to respect that level, we're looking to actually take the trade towards towards these highs. All right. I kind of want everybody to kind of just understand that, right? All right. So everybody got that? If that made sense, type of PL3 in the chat. Everybody should have made money on this trade if you got in. Um, everybody should have made money on this trade if you got in. No, nobody. But I remember, if you were on my last session on Wednesday, I did tell you guys there will possibly be another opportunity for you guys to get into this trade for a buy. And going into next week, there will be another opportunity for you to actually get into this trade for a buy, right? There will be another opportunity. So it's no rush, it's no stress. Just be patient, let it play out. What you will want to see is just, go back to that 4 hour time frame and then just kind of like decipher on, how price is reacting off of these levels. Because if we look here, price came back to an order block. It broke this neckline, right? Created a new high, retest, created this new high, and pulled back. So we kind of just want to see how price is going to react at these levels. Again, um, I am looking for silver to actually buy too, right? I did call silver earlier this morning around 4. It did pull back, which I was kind of expecting. It didn't. It's still in. It's still active. Still an active trade. It did pull back to like test this structural level here. So what I would want to see is I would want to see I just want to see price close above this structural zone. If I can get this price to close above this structural zone, more than likely going into next week, price is going to continue to finish out its move, right? Because we kind of got to understand like the trend that it's moving in, right? Take it for face value, right? I was talking to somebody earlier, really kind of earlier this morning, right? I was talking to somebody earlier this morning, and I was kind of just explaining to them like, he, the guy ended up asking me, he was like, what is the one thing that what is the one thing that you learned from somebody else that was beneficial towards your life? right? And he was also was like, what is one thing that you gave to somebody that could have been beneficial for them to help them? And I told him, I said, something that I've learned over the years is always take things at face value, right? Take actions more than words, right? If the actions aligns with the words, then they tend to be a very good person. But if the actions don't align with the words or the words don't align with the actions, then that's just you're just straight fluff. You know what I mean? And you more so want to lean towards going towards the actions, if anything, because actions is what's going to be able to get you to the next step. Talking about it's not going to be able to get it done, right? You talk about it, you can just talk about it all you want to. Is there action behind it? Are you doing something? Does it mean something to you? It has to mean something to you in order for you to take action. If you're not taking action, then it doesn't mean anything to you. All right. Just want to kind of like give that nugget out. Um, that's just one thing. Also another thing that I told him, something that my uncle always gave me. He was like, if it walks like a duck and it quacks like a duck, it's a duck. You know what I'm saying? That's basically just taking things at face value. And then another thing that I also told him, I just told him to be true with yourself, right? That's something that I always lean with people, and I always tell them like, man, just be true to who you are. You know what I'm saying? Don't hide who you are for anybody. Just be you. If you be you organically, people are going to naturally attract to you, right? You're not going to have to fake anything, right? People are just going to respect just who you are because of who you are. Um, so yeah, that's just something that I just wanted to add in because it still kind of ties in with trading, right? Just taking the market as it is at face value and following the trend. If the trend is telling you to go up, what do you think you need to be doing? Of course, you need to be buying. If the trend is going down, what do you need to be doing? You need to be selling, right? We don't want to go against the trend. That's setting ourselves up for failure, right? We're setting ourselves up for failure. So if we're looking at silver, right? What I like to do, guys, is I kind of go to the daily time frame. I'm kind of put you into a um the way I kind of look at the market. So I understand overall the market is in an uptrend, right? It's buying consistently, right? It's creating new highs and it's taking out those highs, creating new highs and retesting back to areas of value to potentially go take out previous highs that were created. So I understand that. So now when I go down to the 4 hour time frame, right? When I go down to the 4 hour time frame, I want to mark off levels, right, where price is having big moves from, right? A relative high here. We have a relative low at this particular point, and I want to see what how price is moving within a trend based off of those two levels. So based off of these two levels, what trend is transpiring during that time, right? That's what I kind of do. I just kind of want to cut it off and look at two areas, a high and a low. If I take a major high and I look at a major high and then I go look at a major low that was created in the market, I'm able to decipher what's going on the 4 hour time frame. All right, I'm able to decipher what's trend is going down on the 1 hour time frame, if that makes sense, right? So you got a double bottom, right? We know that double bottoms do what? They start uptrends. Double bottom was created, right? And then this double bottom even appeared where? It appeared at a structural level as well as an order block on the higher time frames, right? Which is like the daily. If we go back and look at the daily, right, this is an entire order block here, right? As well as a structural level. So once price reacted off of that level, created a double bottom, we knew that the trend was getting ready to start, right? So it creates its new high. It pulls back where? It pulls back to a order block, right? What order block did it come back to? This one that was actually beneath the broken structure. All right, that's what we want to see. So you got your order block there. Give me 1 second. All right, you got your order block. We want to see candles close above, right? Let me delete that just for a second. Kind of put this into perspective for you guys. So we want to see a bullish candle actually close above. The moment that we can actually get a bullish candle to close above is a moment that we want to see entries, right? We take our entry here, SLs will actually be beneath where? Beneath our area of value, right? We give our trade room to breathe. If it happens to break this order block, it was actually meant to, right? We enter the market and we're aiming towards the highs, right? We're aiming towards the highs. We want to get a great 1-to-1 risk to reward ratio, a 1-to-2, or even a 1-to-3. So whatever, right? If you get a 50 pip SL, you need to have a 50 pip take profit. If you have a 50 pip SL and you want to go for a 1-to-2, you need to have a 100 pip take profit. All right. You guys see that there? That's a 1-to-2. All right. And it naturally goes and takes out a high, right? So when it creates its new highs here, as it did at this particular level, right? When price decided to pull back down, right? Let's delete this for a second. We're going to delete those two. It created this new high. Excuse me. All right. Boom, boom. You get your break of structure, right? This is the deepest last down candle before price actually broke structure. So more times than not, price is going to find its way back to this particular level. And it did, right? It created a double bottom. Price came and grabbed the liquidity below that double bottom. And then what happened? Price respected this level of this order block and closed bullish above. So naturally, what you would want to do, you'll want to take your entry off of this either rejection or either this bullish candle actually closing above, right? And then again, we're aiming towards our highs with our SLs beneath our area of value. All right, and you see how it always ties in. If you guys notice, my SLs are always 50 pips. If I'm catching it from the 4 hour time frame, sometimes it may be 75, depending on what pair it is, right? Um, but boom, you get your you can easily get your 1-to-1 here, right? Or you can go for a 1-to-2, right? Naturally, it's going to always put you in position to at least get a 1-to-2 risk to reward ratio, and for sure a 1-to-1, right? It gives your time trade. It gives your trade room to breathe. Again, you take the trade up, you make your money, you go about your day, right? Again, price creates those new highs. When it decides to retest, it's always going to find an area of value to test from. Always, every single time. It never fails. Look what's also inside of this order block, right? A structural level also ties in between this point. All right. A structural level always ties in within this point too. If that happens and you get two areas of value within each other, right? If you get two areas of values within each other, that's double confirmation. Guys, we can even again add the Fibonacci tool for more confirmation for you, right? The relative low to the relative high. What happens? It comes to the 38.2 and it also hits the 50% level. Then what do you get? You get a bullish candle closing above both this structural level and this order block. So the moment that you get price closing above both of those is again the moment that you can take your entry back to the upside. Right? Again, you would have at least a 50 pip SL if you want to go for 75. That's cool. But at least a 50 pip SL will do it for you. And then again, you can aim for your 2.7, right? Because that's your target point. And if you see that, it also even tied in actually taking out this high when it naturally even did that. See? All right. So again, right? Price creates those new highs here. When price decides to retest, where is it coming back to? The last down candle before price actually broke structure. Like it, they say there's nothing guaranteed in the market, but something that's guaranteed in the market, guys, is price always coming back to an area of value. One way or another, it's always going to do it. All right. So that's something that I could put the bank on. I give you every dollar that I have and guarantee you that it's always going to come back to an area of value. That's something that I can be very much so guarantee you about in the market, right? I can't guarantee you anything else, but I for sure can guarantee you that price is going to retest back to one of these areas of value every single time, right? If we look here, let's delete the previous ones that we use, right? We moving on. Again, you get your what? Your break of structure here. Do you end up getting your break of structure here? All right. When price creates those new highs, when price decides to retest, All we need to see is either rejection or a bullish candle actually closing above this level. And we actually got that, right? But again, we take our entry, right? Either off of the rejection. If you see that it is rejecting, more than likely you can enter it like that, right? Or if you want to wait for that bullish candle to come, again, you can enter there with your SLs actually being right below this particular point, right? Which naturally gives you a 50 pip SL. And then again, we want to aim back above those highs, right? At least for a 1-to-1. If you want to go for a 1-to-2, which is 100 pips, you do that. Money's made. You go about your day. Again, how I was able to call this particular trade. Yes, it went into drawdown. I'm not tripping about that. I can care less about it, right? I can care less about drawdown if I'm confident in what I'm looking at, right? If I'm confident in what I'm looking at, and I know that this just created a new high and price retest, right? Where did it retest to? That's the question you got to ask yourself. The last down candle before price broke structure, that gives you your bullish order block. All right, where did price come right back to? It touched here and gave us multiple bullish candles closing back above. So if I'm seeing this, right, I already understand what's transpiring. I already know what's happening. So I could have entered my trade here, right, for my SL actually to be below. And again, that's a 75 pip SL, right? It ties into like having your SL beneath your order block. Sometimes your SL will actually tie in right in between an order block or a structural level or a fair value gap. You just got to be patient. Um, Again, we want to go for what? At least a 1-to-1, right? 75 to 75, right? And we see how price respected that level and actually took out that 1-to-1. If you want to go for a 1-to-2, right, that'll be 150 pips instead. All right. I believe you have 150. 75 plus 75, yes, 150. So you got 150 that gives you your 1-to-2 risk to reward ratio, right? If you were taking it from this particular point, you would kind of still be in this trade looking for price to push up to this level, right? But what I seen, this is the higher low. So, right, from our relative low here, price broke structure again, and now it's actually respecting a structural level that's made at this particular level. And now we're actually looking to take the trade back above these highs. That's right here. But again, I like what I'm seeing right now with silver. It's actually rejecting this structural level. I just want to see it close above. If it closes above, then I'm kind of confident that this trade will actually change directions and eventually go into profit. So that's just me though. Um, did everybody understand that? Hopefully that made sense to everybody. If it did, again, you can just either put a three or a power PO3 in the chat and let me know if that makes sense. I went over that. Let's go back to this for a second, because then we can even tie in like looking at a downtrend and then kind of even understanding like what's on the backside of this trade. Before I show you a downtrend example, I can show you what's on the backside of this trade. I'm not sure if anybody knows what is divergence, right? What is true divergence? And then without even looking at an indicator to kind of determine that, what do you know how do you know what divergence is? When divergence is actually made in the market, divergence is made for it to actually eventually be broken. So it'll create this move and price will flow, but it created moving at a slant like it did to give you divergence. If you see from this high to here, there's like an opening gap in price, right? That's divergence. If you see that, you have to understand that eventually price is going to set itself up to potentially take it out, right? Whether it takes time, whether it happens quickly, that's divergence, all right? And another word for divergence is like literally liquidity. That's it, right? So that's that on that. All right. Everybody understand that so far? Everything's good? All right. So that's why I called silver for a trade. It did go against us a little bit. That's cool. I'm not mad at that. I'm not mad at all about that. Um, what am I showing again? Please tell me what I'm showing again. Because that's kind of vague. That's a vague divergence. Okay. Um, this is divergence. So you have a high here, and then you have a lower high here, but you see how when you slant this and you put a trend line to it, it leaves a gap in price here, right? But then you have to also be take into account what is the true trend, right? What's the true trend? The true trend is here. It's moving in the true uptrend, right? It's moving in the true uptrend. This is the new relative high that price is potentially looking to take out, right? If you guys haven't noticed, gold and silver is something great to be investing in right now. All right. Gold and silver is something to be definitely you want to invest in. Um, I called I called gold actually hitting 3,000 a while ago, like last year. I knew it was going to hit 3,000 just based on how the market was moving and how it was kind of setting itself up. And it's literally actually on its way to 3,000 right now. So I did expect this to happen. It was just a matter of when and how, right? And now it's setting itself to actually do that. This is the 3,000 mark, right? That's the 3,000 mark. And that's where we will look at for price to actually and eventually be heading to. All right. Because not only that, that's an actual whole level. And price loves whole levels. Price loves whole levels. Okay. So numbers that are like flat like this, it loves those levels because those are natural target points and those are natural support and resistance lines in the market. All right. Boom. Now, I went over those guys. I've explained that to you. Um, if you guys want me to take a look at something else, like a different pair, please feel free to let me do that. Please feel free to let me know so that way I can do that for you. If there's a pair that you guys want me to look at, but you guys see, I kind of just stay consistent with the pairs that I do trade. And I just kind of just want to go from there. I don't want to like overdo it. Oh yeah, GJ, it's selling. I can tell you that for now. I can tell you that right now. GJ is selling. If you didn't get in already, you kind of just want to wait for noon time to come around, Central Standard Time, to possibly, catch your entry. It might even pull back a little bit on you because of how deep this candle is on a 4 hour time frame. So you kind of just want to play it safe. But if you see here, what trend are we moving in? It created a double top, right? What ended up happening? What trend is this? Right? It's a downtrend. Clear as day. Double top. Price takes out these higher lows on the backside of a trade. Right? It creates its new low. When it pulls back here, it comes back to a where? It comes right back to a fair value gap, guys. Right? From wick to wick of these two candles, right in between the body of this one is a space in price. All right, which gives you your fair value gap. And all you want to see from this level is bearish candles closing below, which it did, right? Then you want to take the trade back below these lows. It's actually going to set itself up to put you in a good position, right? Let's put this into perspective. If I was to take this trade for a sell, I would wait for this candle to close. My SL would be above, right? Above these highs. 75 pips is cool with me, right? That's the max I will go on the SL, 75 pips. And then again, you at least want to go for a 75 pip gain, right? But if you don't want to go for a 1-to-1 and you actually want to take it towards its low, again, you can go for a 1-to-1, a 1-to-2, a 1-to-3, and sometimes even a 1-to-4 if price sets itself up that way. All right. You guys see here, what's 75, right? That's four times 70, 75 plus 75 plus 75 plus 75. It gives you, eventually, it'll give you that number, right? Excuse me. It'll give you a 1-to-4, right? 1-to-4 is right there. So 300 pips, 75. Yeah, it'll give you 300. There you go, Shay. Good job. 75. It gives you a 1-to-4 risk reward ratio. 75 plus 75 plus 75 plus 75 gives you 300. All right, and then ultimately even goes down to that new low that is created. If you guys notice here, it creates a new low, price retest. Question is, where did it retest to? There's a Fibonacci. I mean, there's a fair value gap here, right? From this candle's wick to this candle's wick here, right? That gives you your what? Your fair value gap. You got a candlestick that closed beneath. SLs will go above. Sort of looks something similar to this right here, right? You enter the market after that candle closes, SLs will go above, right? And you see, this is why I was sometimes saying like your SL may play inside of a zone at points that may happen sometimes. 75 pips is the maximum I'll go for SL. I won't go above that. And again, I will be aiming towards my lows. And if you guys see that gives you a great 1 to 3 risk to reward ratio. All right. 75 times 3 gives you 225. All right. Boom. You make your money, you go about your day. All right. Now let's go and let's actually tie in the Fibonacci. Um, right, because that's something that I also want to give you guys a Fibonacci tool because um that can be extremely beneficial and you'll kind of like notice that if you're looking at the Fibonacci tool actually within like a downtrend. So like for example, you guys see how I came up with these zones, right? So this is a relative high, right? If I was to add my Fibonacci tool into this, I guarantee you for a fact that once I place my Fibonacci tool, this zone will lie in between, right? One of the numbers that are in my Fibonacci. So from the relative high to that relative low that was just created, you guys see that, right? From this relative high to this relative low, when price decided to pull back, it literally hit the 786, but it also tapped inside of this fair value gap zone. So that's like double confirmation. And again, that's all I want to see is again my candle close beneath my zone for me to take my entry and have my SLs above my fair value gap area, right? And then I will be aiming to my what? My take profits, which is will be the 0 and or the 2 1 or in or the negative 0.27. All right, and it's gonna tie in that way all the time. So this is my new relative high. This is my new relative low here. If you guys notice, right, what is touching this fair value gap? This 38.2. Did price touch that 38.2? No, but it did fill in a fair value gap. Not completely, but it touched it, right? And then it gave you the what? The bearish candle closing below. Again, you can have your SLs above these highs because if price ends up breaking this, it's more than likely going to head up a little bit higher, right? But again, we at least want to aim to the 0, right? To the 0 or the 2 1 or the 0.27, right? Hopefully everybody is understanding that. Hopefully that makes sense to everybody, right? Please can you please explain how the field tool works? What are we looking at exactly? The numbers. Yeah, you're looking at the numbers because these are the discounted areas that price are going to pull back to, right? You're just simply using this as like double confirmation ultimately, right? If I take my Fibonacci tool away, I would just solely be going off of my areas of value, right? But if I add in the Fibonacci tools mathematically, right? Because trading is a mathematical format, right? Mathematically, if I take my relative high and I know that this is a relative high and I know that this is a relative low because it took out a higher low, which is making my new lower low. If I put that there again, where does my fair value gap tie into? Right in between the 886 and the 786. These are discounted levels that price are always going to retest to, right? It's just double confirmation and let you know that this area of value is very much so significant, right? And then it gives you areas to actually take the trades to. So you're not guessing on where to take the trade to, right? You're knowing where price is potentially heading. That's literally all it is. These numbers on the side here is like the 50%, the 618, the 70%, the 786, the 886. These are extreme discounted levels based off of this Fibonacci tool. I don't want to make it difficult. It's just simply what it is, right? It's just reading it as if you were, is it sort of like just reading the chart as if you were reading it based on just my regular method that I give you guys. Just using the Fibonacci tool just gives you double confirmation. That's it. You know what I'm saying? Hopefully that answers your questions, Charity. All right. And then again, when price creates that new low, is there a setting for it? Yeah. Um, This is my Fibonacci tool, and this is the settings right here. Every box is unchecked, but these two, and then these that I have here. So if you guys just want to take a quick picture of that, you can. But that's my Fibonacci tool, and that's the numeric numbers that I have tied into it. So you want to take a picture of that, please feel free to do so. Um, yeah. But again, you have what? Your lower low, your lower high, your lower low, your lower high, right? Your lower low, lower high because price didn't go back above this high. So ultimately, what did it give you? If I tie in a Fibonacci tool, we see from this relative high to this relative low, what do you end up getting? Price coming back to a structural level inside the 618 and the 50%, which is like the money zone. And then what do you get? You get that strong bearish candle closing below. So the black numbers are what we should be aiming at, right? All of these numbers, you just have to. I don't want to. You're kind of making it a little bit harder than what it is. It's just simply looking at the relative lower high, right, to the relative lower low, and then simply just adding your Fibonacci tool into the relative lower high to the relative lower low, and then seeing how price is going to react either off of this structural level or another area of value that's on another in this move. Because, like, for example, price didn't have to stop here, but it did because prices are actually right in between this 50% level and the 618. If price wanted to work its way up, and touch another area of value, this order block would have got touched. And where's that order block? It's literally right between the seven. It's literally right on this 786 and an 886, right? So if price happened to even come here before it actually headed lower, then that's it. It's no guessing. It's just simply marking off the key areas of value within the trend. If the Fibonacci tool aligns with your area of value, that shows you more confirmation. That's it. You don't even necessarily even have to pay attention to the numbers. You can just pay attention to the candlesticks in itself, and that will tell you what you need to do, right? Just because we got this rejection off of here and we got a bearish candle actually closing beneath this structural level, right? All we need to see is a bearish candle close beneath that level for me to take the trade back to the 0.27. That's it, right? Hopefully that answers your question, Charity. I'm not trying to make this difficult. I just wanted to get this. I know this may be your first time on a session with me. It may be, I'm not sure. If it is, everybody else that's kind of been on with me before kind of gets the gist of what I'm getting, what I'm putting down, or at least you should, right? If you're not, then that's my fault. I should be doing a better job, right? Because it ain't about me, it's about you. Hopefully that example kind of makes sense to you. Kind of give me something so I know that you kind of understand it, Charity. If not, um, I got videos for days on my YouTube. You can just check out. Yeah, yeah. You would probably, yeah, you got to be on consistently with me in order to get it. Because I want to know if anybody else that's been on with me before, if that's making sense to you. If that's making sense to you, then it's yeah, you got to watch the videos. If you watch the videos, this is just me adding on to what I've already taught everybody. If you haven't been on consistently with me, it's not probably going to make sense right now, right? But if you've been on with me before and this is making sense and it's tying into it with each other to give you like double confirmation, let me know. If it's not making sense, then tell me. But if it's making sense and you've been on my sessions before, let me know something. Right? Okay, Shay understands it. Anybody else? Yeah, okay. That's why, Charity, right? At the end of the day, that's why you're new. So me adding on this to it is kind of probably going to be a little bit foreign to you, right? But if I was just to simply um I just want you to kind of just be hop on my sessions consistently and it'll start to make sense, right? If you've been on a set, like I said, if you've been on a session with me before, then it should be making sense to you. That's all. But if you haven't, I understand why, right? It's cool. No stress, right? Let's just look at the market with how I've already been giving you the examples to look at it. Um, right? Now I went over, hold on, because I went over at the very beginning, I went over the very beginning on how the market operates, right? What time did you get on, Charity? That'll tell me a lot. That'll tell me a lot. What time did you actually get on the call? Because I start from written examples and then I move into the live examples so that what's able to make sense. But if you hopped on late, then that would be kind of I'm understanding I normally scalp trades, but I'm learning higher time frames better. You're doing a great job. Okay, cool. I just want to know if I'm kind of like I don't want to like I don't it's not like I said, it's not about me. I can care less about what I believe or what I feel like is making sense. You've been on for about 20 minutes. All right. Then yeah, if you just got on, it's not gonna make sense to you. I'm not even gonna lie. And then you're new. So what I would have to do and what I am gonna do, all right, let's go back to GA for a second. Give me just a second. All right, so again, we got about like an hour until noontime again. Like I said, I'll be buying GA for a buy. Being a bit aggressive on this trade. Normally, I would say wait until price breaks this trend line, but I'm gonna be aggressive, right? Um, so yeah, guys. Hopefully, this session made sense to you guys. If everything has made sense and you don't have any questions, I need everybody that's still on the type of PL3 in the chat, right? And I want you guys to stick around. Don't get off. I want you guys to stick around. If it's making sense to you and everything that I've explained thus far is good, you're straight, you don't have any questions, type of PL3. And then what we're going to do is we're going to end this session today on this live session. All right. We're going to end the recording. I appreciate you guys for getting on. What I'm going to do now is I'm going to get a little bit more intimate with you guys to so that way Charity understands. All right. But with that being said, guys, I appreciate you guys for checking in, tapping in. I'll see you guys Wednesday, right? I'll see you guys Wednesday, and I also will see you guys following Friday as well. All right. So with that being said, that'll be the end of the live session recording. With that being said, I'll see you guys soon.